welcome back, traders. So what started as maybe a hopeful reset yesterday, that morphed into a full-throated bear revival today.
Definitely revival, slamming the indices right through fresh technical floors.
Right. And the dollar's surprise dip, that usually helps, but it just added this weird twist to the sell-off script.
Exactly. And then you had all that buzz. Job loss alarms, middle-class belt tightening.
Pouring fuel on the fire. That brief IWM spark we saw turned into small-cap kindling today. Potential for deeper flames, maybe. Anyway, you're tuned into the Stock Market Summary Series, and as you guys know, none of this is buying or selling advice.
Nope, just commentary and education here.
Nothing we say is financial advice. Okay, well, let's get into it.
So let's unpack that technical violence. The mission today, really, is to figure out why the market broke down so hard.
Especially with that dollar weakness, right? That usually signals risk on.
It does, but it failed to stop the bleeding. It really suggests that, momentum and just the narrative completely overpowered the macro signals today.
Today was pretty brutal.
How brutal are we talking?
Well, SPY fell 1.07%. QQQ dropped 1.86%. Both closed decisively below their 20-day moving averages.
Okay, so that's a clear technical failure point. And IWM, the small caps.
Cratered. Another 1.77% down. Just adding insult to injury there.
Oof. But, that pain wasn't spread evenly across the board.
No, that's true. The sector divergence was pretty fascinating. Really highlights the market's big fear right now, doesn't it?
Which is?
The consumer. Consumer discretionary, XLY, that was the lead loser, plunged 2.31%.
Wow. And that's a stark contrast to, say, energy XLE, which actually managed to gain.
Yeah, up almost 1%, 0.97%.
But it's not like new money is flooding into XLE, right? It's more like it's just resisting the sell-off because, well, inflation fears are keeping oil and energy somewhat buoyant.
And the headlines certainly didn't help the broader market. There wasn't much hard economic data.
Right. It was sparse today.
So the market was just driven by this narrative noise. Headlines about surging job losses, AI causing hiring freezes, middle-class spending cuts because of tariff talk.
Exactly. And that noise, that fear narrative, it provided the perfect justification for those technical breakdowns we saw. Especially it validates that XLY weakness.
So speaking of technicals, we're seeing some really high-stakes patterns building, aren't we? Consolidation's getting tight.
Extremely high stakes. Look at real estate, XLRE. It's coiled super tightly in what traders call a symmetrical triangle. And this is on the weekly chart.
Weekly is significant.
Huge. It signals a massive move is pending. And right now, it's testing that crucial lower trend line, a break there on the weekly. That's not just noise.
We're seeing something similar, maybe less dramatic time frame-wise, in financials, XLF. Daily triangle there.
Yep, daily pattern. It's creeping closer to the apex, the pointy bit, but it's hitting resistance right at its 20-day moving average.
So with patterns like these, patience is key, right? You got to plan for the move, whichever way it breaks.
Yeah, absolutely. Trading wisely here means planning for a definitive breakout or breakdown. Can't just guess. That pattern recognition skill, knowing how to play these setups, that's something we really focus on intensely in the Grok Trade Mentorship program. It's foundational.
Makes sense. And this risk-off mood, it just hammered anything speculative. Look at crypto.
Total collapse there today. Bitcoin plunged, 2.88%?
Yeah, instantly crushing those hopes for a double bottom bounce off that 99K level we saw forming.
And the poster child for stock pain in that space? Coinbase, Coin.
Oof, yeah. Coin collapsed right out of its own triangle buildup. Just a textbook failure, really.
It perfectly echoed that broader risk aversion. Meanwhile, metals, gold, silver, GLD, SLV.
Kind of just meandered sideways. Didn't really do much.
Yeah, holding their current consolidation ledges, but offering zero relief for the equity selling.
Okay, makes sense. Hey, as always, guys, if you've got a stock you're watching or maybe a question about the markets, just drop it in the comments below.
Yeah, we do read those and might cover it in an upcoming episode.
And by the way, if you're enjoying this video and you appreciate these market summaries, do us a big favor. Hit that like button. It's totally free for you. Helps us out a ton.
Definitely helps the channel.
And click subscribe, too, so you don't miss a beat. You can always unsubscribe later if you want.
The way CoinAnoi just fell apart and how XLRE is sitting right on that critical edge, it really highlights why you need a solid risk framework.
Absolutely essential.
Because when volatility spikes like this, you need surgical precision, probability-weighted entries, knowing where to get in. But just as critical, having stop losses set.
And the discipline to stick to them, right? Avoid those emotional exits.
Exactly. Yeah. That's the kind of evergreen trading edge we coach students on, developing every single day in the Grok Trade Mentorship. building that unshakable framework.
Good stuff. So, okay, wrapping up, the core takeaway today seems to be the bears really jumped on yesterday's weak rebound. No hesitation.
None at all. And that consumer weakness narrative just magnified the shaky technical setups in places like real estate and small caps.
Confirming that momentum is definitely driving the train right now.
For sure.
All right, well, have a great rest of the day, everyone.
Yeah, trade safe.
And we'll catch you in tomorrow's market summary.